Hello and welcome to another episode of Crypto Corner with myself, OJ. This is your crypto radar for all of the latest news, reviews, market analysis and tutorials that help you master the cryptocurrencies market. Well, it's Friday, so today we're going to go through the news. We're going to look at the markets. We're going to do a quick roundup of the markets. Everything is actually down today, which is not great. Bitcoin fell to the lower support of 31,000 and of course it dragged the whole market with it. In fact, the top 10 are actually performing exactly as Bitcoin. Pretty much everything is around 3 to 4% down. One of the bigger losers in the top 10 is Polkadot, 8% lost since yesterday. This makes it almost 20% losses on the weekly. And Uniswap is also with a similar performance. It is at 8% down from yesterday, 20%, 20.5% down on the weekly. Also, Solana was actually doing quite well over the last few days. It was pumping, but today it is going through its correction. 10% losses in the last 24 hours, 16% losses on the weekly. And Chainlink, 7.5% losses since yesterday and almost 15% on the weekly. Now, from the coins that I'm actually following and I'm trading and everything, we have some gainers. NEM is actually doing well, 12.5% up since yesterday, which actually makes it 16% up in Bitcoin value. H-bar, Hedera hash graph, is also going up, 6.97% up in the last 24 hours in fiat value, 10% up in Bitcoin value. Also, Divi project is doing well, 5% up. Saylor, 1.22% up in fiat value, almost 5% up in Bitcoin value. This is going to be short-lived actually, because this kind of market moves are really depending on Bitcoin. When Bitcoin is dropping down, and it is dropping down right now, you cannot sustain a positive price action in the altcoins because as you know, when Bitcoin is going down, people get scared and they exit crypto in general, not just Bitcoin. This is why we are seeing some of the altcoins, many of the altcoins, in fact most of the altcoins, performing worse than Bitcoin when we go down. They sometimes perform better than Bitcoin when we go up as well, but right now it will be all depending on Bitcoin. They are not going to be making any big moves on the upside while Bitcoin is dropping. This is why Bitcoin is really important right now. In fact, Ethereum and Ripple and some of the top coins, Litecoin, are currently at the biggest correlation that they've had in a while against Bitcoin, meaning that they are moving hand in hand with the price in Bitcoin. Looking at this chart here, which is provided by cryptowatch.ch, Ethereum is at 0.90 correlation to BTC. I mean, this is really high. Litecoin 0.86, Ripple XRP 0.72, Cardano ADA 0.80. As you can see, these are actually quite high amounts, meaning that right now when Bitcoin is going down, they are going down pretty much at the same rate. In fact, Ethereum pretty much at the same rate. I've been saying that for quite some time now. I analyzed the charts yesterday in Bitcoin and Ethereum, and my Ethereum analysis was really brief and short, as you noticed, because in fact whatever Bitcoin is doing right now, this is what Ethereum will be doing, despite the hard fork of Ethereum coming very soon and improvements and upgrades being implemented. This is still not going to drive the price of Ethereum that much higher than Bitcoin, because overall the sentiment is down. Overall, the searches for Bitcoin and crypto in general are down. This is actually something that I discussed yesterday. I was a guest at the Around the Blockchain show here on YouTube, and we were discussing some of the news. One of them was the fact that the Bitcoin searches are at a very low, 7-month low right now. They're not at an all-time low though. I mean, they have been lower in 2019 during the bear market, but in 2018 as well. But still, we are on a 7-month low right now. And this is sentimental analysis. It is also not very different from what we are seeing with the crypto fear and greed index, the Bitcoin fear and greed index. We are again in the extreme fear stage. At some point we were at 17, we were just in fear stage, which was kind of improving. This is the sentimental analysis that I actually look at quite often because this is kind of showing me whether there is an appetite for Bitcoin. And currently there is not appetite for Bitcoin. Also, Google searches, another sentimental analysis indicator, no appetite for Bitcoin right now. This is also why we keep dropping, and we will be keeping dropping until we find some confidence back in crypto and Bitcoin in particular that can draw more buyers again into Bitcoin, because if people are not buying, then you cannot actually get a good spike up. Now let's look at some of the top headlines of today. And starting with one of the bigger headlines here, Square announces new DeFi ecosystem built on top of Bitcoin. Jack Dorsey, Square Corporation CEO, made the announcement via Twitter earlier today and revealed that the new venture by Square would be focused on building an open developer platform with the sole goal of making it easy to create non-custodial, permissionless, and decentralized financial services. And of course, our primary focus is Bitcoin, according to him, according to this tweet actually that you're seeing here. Jack Dorsey is also the Twitter CEO. He already announced that Square is building a non-custodial hardware wallet for crypto earlier this month. And just a few days ago, I reported about the latest upgrade to the Bitcoin protocol that is known as Taproot, an important upgrade that will open the door to smart contracts being built on the Bitcoin blockchain. The main usage for now remains financial operations. We are far from competing with Ethereum in terms of smart contracts use cases, but we don't really need to. Bitcoin is primarily a currency network and it's best as such, so I don't really see a reason to turn it into Ethereum. However, once smart contracts on Bitcoin become a thing, I wouldn't be surprised if we see all kinds of applications and use cases being introduced. It will really depend, of course, on how fast transactions can be confirmed. If Lightning Network can be used with this, then surely we will have an explosion of applications in no time. It is still too early to speculate on this, so we will revisit this topic later in the year. Okay, the next big headline of today is PayPal raises the limit on cryptocurrency purchases to 100,000 per week. The company assured that the move comes in response to the feedback that they got from their clients. The announcement is as part of our efforts to meet the ever-changing needs of our customers. We are pleased to announce that we have recently raised the purchase limits of cryptocurrency for eligible PayPal customers in the US only to 100,000 per week, dollars of course, with no annual purchase limit. These changes will enable our customers to have more choice and flexibility in purchasing cryptocurrency on our platform. We are yet to see PayPal open the doors to crypto for Europe and for European customers. I'm personally still not having that option in my PayPal. I don't know about you, and I'm based in Europe, European Union, so we'll see if they actually will do that this year, by the end of this year. Will it be next year? We don't really know yet. We don't have a confirmation. Okay, moving on to the next headline. $7.5 billion US hedge fund investment manager predicts incoming Bitcoin supply shock. Troy Gaiske, co-chief investment officer and senior portfolio manager at Skybridge Capital, a hedge fund with $7.5 billion in assets under management, has revealed that he believes a Bitcoin supply shock may be around the corner. During an interview with Bloomberg, Gaiske noted that on-chain signals indicate strong holders are once again accumulating Bitcoin while planning to hold onto it for longer periods of time. These holders are buying up coins from speculators who got into the market when Bitcoin's price started surging. He said, when we look right now at the on-chain data, what is basically telling you is that a lot of the strong holders are reasserting themselves and accumulating from those that got into the market late last year. And that is setting itself up for some type of supply shock. Very similar to what we had last October, November. I actually did a video a few days ago where I was looking at 10 different charts, and one of them was the outflows from exchanges, meaning the Bitcoin that is actually taken out of exchanges and they were going up. So as Bitcoin is being taken out of exchanges, that means less liquidity, less volume for people to trade with, and basically less supply. So less supply without the demand going up is already a bullish case. If the demand goes up and the supply is less, is even more bullish. So this is what I was talking about. The only thing that we have to worry about is if the demand decreases, and currently, unfortunately, the demand is decreasing because people are losing faith, people are getting scared, people are feeling uncertain, people are fearful, and you saw we are in extreme fear. And at that point, they are not buying. Even though the price is really appealing, retail investor is the one that doesn't really get into these assets when the price is the lowest. They get into these assets mainly when prices are going up. They want to see that tomorrow the price is going up, and the next day the price is going up, and the next day. And once they see a consecutive days of prices going up, then they think, okay, maybe it's time for me to buy. This is why a lot of the times they're buying near the top, because the price has been going up and up and up for a long time, and they decide to jump in just as the price is nearing the top. This is what usually happens. Now these people are selling, and the long-term investors and holders are the ones that are accumulating, because they know that it wouldn't really matter in a 1 or 2 or 3 years time. It wouldn't really matter if you bought Bitcoin at 31,000 or at 35,000 or at 36,000 and you missed it at 28,000 or something like that. These price movements are actually small price movements, and long-term investors don't really care about these small price movements. Okay, moving on to the next topic, and this is the US government intends to employ crypto tracing to fight ransomware attacks. This is actually a topic that we covered in much detail last night at the Around the Blockchain show. We discussed several topics, including this one. So make sure that you catch this episode too. I will drop the link in the description below. Now, the UK financial regulator is intending to spend 15 million UK pounds, or actually this is in dollars here, the estimate is in dollars, but that means they'll be spending around 10 million UK pounds in order to make a campaign against crypto investments. Well, this is nothing new. Actually, they've been doing it since the bull run in 2017, but they're kind of stepping up the heat with this money being spent on this campaign. I actually wonder who is behind this, who is actually sponsoring this campaign. I would be surprised if it's funded by the taxpayer, but clearly this is a desperate attempt at scaring people away from crypto in favor of bonds or other government-issued securities. UK is going to be reminding residents that they should be prepared to lose all of their stake when investing in crypto. What does that look like? Well, I know. Anyway, Michael Saylor, one of the biggest Bitcoin bulls and a huge holder of Bitcoin, his company MicroStrategy is one of the biggest investment funds with Bitcoin holdings of more than $2 billion worth, is still saying that he's not going to be forced to sell no matter what. So I actually mentioned already that I am working on a video with some of his best Bitcoin bits from different interviews and everything. It is in the making. It will be ready hopefully by the end of this week. So next week I will be posting it, and make sure that you catch it in the moment I post it, because I will be using footage from various different networks, including CNBC and stuff like that. So I could get into copyright trouble, and if that is to happen, I will have to take the video down, but you will probably be able to watch it in the first hours unless the algorithms catch it really quickly. So make sure that you're subscribed to the channel and hit the notification bell so that you don't miss that episode, because you will see some really good points that he's making from various interviews actually. All right, moving on to the next one, and this is another analyst, yet another analyst that is predicting that Bitcoin is going down, that institutional investors are now kicking their butts for getting into Bitcoin prematurely, as he says. Peter Brandt this is, and he is a famous analyst. In fact, they call him veteran commodity trader here on u.today. He believes that institutions who got into Bitcoin earlier this year must be kicking themselves for making untimely bets. The legendary chartists, I wouldn't say legendary, also points to the fact that Bitcoin's resilience above the pivotal $30,000 level might be a legitimate test of how reliable on-chain analytics is. Well, I can agree with that, but I don't really agree with him that institutional investors are really so worried about Bitcoin dropping below 30,000 or to the 30,000 support range. From what I know and from what I've seen, big money doesn't really care about the small market moves and the short-term market moves. I mean, they got into Bitcoin a couple of months ago, maybe 3 or 4 months ago. So what happens with Bitcoin right now is kind of irrelevant because institutional investors are looking in the longer term. Even 1 year is a short term for them, and typically what they do is they accumulate more at dips. So I wouldn't be surprised if we see institutional investors stepping in again if we drop to the 25 or 22,000 price range, because this will be a really appealing price range for them, and they know that in the long term we are going to resume the bull run at some point. We are going to go to the previous all-time highs, 60,000 and above. We're going to go to new all-time highs, 80,000, 100,000. Institutional investors are looking at this kind of big moves. They don't really care about Bitcoin dropping from 40,000 to 30,000 or even from 60,000 to 30,000. If anything, this is ideal buy opportunity for them, and I'm pretty sure that we will be seeing reports about institutional investors accumulating more Bitcoin during these dips. Alright, and one last headline that I'm going to close this with: make it rain Satoshis. Well, Las Vegas strip club is now starting to accept Bitcoin payments. Not that this is any big news, but I just needed to end it on a higher note. This episode is sponsored by Token Metrics, one of my top tools for market analysis and for finding little known altcoins before they blow up. You can get 10% discount when you sign up with the link in the description below, and you can give it a test run for a week before you commit to a long-term plan. They publish detailed analysis on their website, Telegram groups, and via emails directly to your inbox, plus weekly webinars for all members where they go deeper in the technical analysis of the most profitable coins.
Token Metrics is a cryptocurrency investment platform that helps users leverage machine learning to become better crypto investors. Our in-depth analysis helps eliminate the emotions of investing, find profitable investment opportunities, and filters out scams.
Well, this concludes today's episode of Crypto Corner. Thanks for staying until the end. I hope this brought value to you, and if it did, please share it with someone else who would benefit from the information shared here. Also, show your support by leaving a like and a comment below. Leaving comments will also qualify you for my summer giveaway. You can win prizes in Bitcoin, Ethereum, Litecoin, and a brand new Ledger Nano S, the most popular hardware wallet device on the market. If you are new to crypto, consider getting a copy of my books, Learn Crypto, the ultimate beginner's guide to investing in cryptocurrencies, and Crypto Jargon A to Z, a complete dictionary of all the crypto terminology that you see in articles, videos, and on social media. These 2 ebooks have already helped thousands of people turn from crypto newbies to experienced investors who know how the markets operate and how to avoid the mistakes that every new investor makes. Links are in the description below. Make sure that you catch my next episode. If you haven't done that yet, hit the notification bell so you know when I post a new video. And if you want to see more Crypto Corner episodes, just pick one of these.